Hey folks, hope you are doing well. I'm Karan Bandal from Economist Site, and in this video, let's talk about the capital flight taking place in China. This is part 2 of our discussion. In first part of the video, I discussed probable factors driving the capital flight. Check out the link in the description for details. In a nutshell, for a wealthy Chinese individual, finding value deals to park one's capital has been tricky. The conventional asset classes in China have been underperforming. Chinese stock market is yet to recover from its peak in 2007. China's real estate is in a full-blown crisis, and the government bond space is either facing defaults or have minimal returns. All three asset classes are pushing capital away. And that brings us to the topic of capital flight. Capital flight is basically what it sounds like. People take their money and move it out of their home country. If capital is not finding a desirable place in China, naturally it will try to get out. And this is not the first time it has happened, by the way. Back in 2015 and 2016, a record amount of capital outflows of over $200 billion took place in the third quarter of both 2015 and 2016. To combat this, China had imposed capital controls towards the end of 2016. Back then, any Chinese company seeking to invest overseas, acquire a foreign company came under the government scanner, especially if the deal was worth over $10 billion. That kind of rush to get money out of China is showing up in the data again. Note that China places a cap on individual purchases of foreign exchange at $50,000 a year. At that pace, it will take some 20 years to move $1 million out of China. And for a wealthy Chinese individual, $1 million is not that much money. Now, if you get caught violating these capital controls, you can get fined more than 50% of the amount involved or even get prison sentences. Despite that, money is moving out of China. It speaks to the desperate situation currently present in China as far as the investing options are concerned. In numbers, from the quarter ending in March 2022 to the quarter ending in December 2023, over $300 billion worth of capital has been exiting China on an ongoing basis. And people are getting creative in how they get their money out. One of the methods includes the use of cryptocurrency. Even though Beijing banned crypto trading in 2021, setting up a crypto wallet is still legal. So, people use Chinese currency to buy crypto assets using a facilitator. Once they have crypto asset in their digital wallet, they carry the hard drive containing the said crypto asset overseas. There, they can convert the crypto asset into US dollars or into other foreign currencies. Unlikely that the $50,000 a year limit can be enforced in this case. Another route is the use of art. So you take a painting or any other valuable piece of art to Hong Kong, sell it at an auction there, and keep the proceeds in foreign currency in Hong Kong. Hong Kong doesn't have any capital controls, so money can be moved overseas from there. Another way is to overpay for imports to move the money out. Also, setting up shell companies overseas, then using it to buy stakes in local companies is another way to skirt the capital controls. Now, in my opinion, this capital flight is also visible in the movement of China's foreign exchange reserves. There may not be a direct causation, but there appears to be some correlation. Look at China's forex reserves. They are sitting at a whopping $3.3 trillion as of October 2024. But note that they hit a peak of almost $4 trillion in June of 2014. Remember, we talked about the capital flight in 2015-2016? A sharp fall in China's forex reserves coincided with that. Forex fell by almost $1 trillion by 2017-2018. Since then, it never really recovered. Rather, China's forex is hovering around $3 to $3.3 trillion. This even though China ran a trade surplus of around $600 billion since 2017 every single year. This $600 billion a year worth of surplus should have raised China's forex. I understand there are more avenues through which foreign exchange enters and exits a nation, but a falling forex and an uptick in capital flight piqued my interest. In summary, the economic data from China is flashing capital flight. People are deploying all kinds of risky methods to skirt capital controls in China, from the use of crypto, art, to the use of overseas shell companies. If you get caught, the consequences are severe, and yet Chinese nationals are risking it. It appears that the wealthy Chinese have lost faith in the prospects of the domestic economy. I hope you found this analysis interesting. I'll speak with you again next week. Until then, take care.